welcome to Your Money. I'm Julia Lee. If you've got a question about shares, our phone lines are open, so please give us a call on 1300 30 34 35, or if you prefer, you can also email us on yourmoney@skynews.com.au. Well, it's been another great day on the Australian share market. Not only have we seen the Australian share market rising the last 4 out of 5 weeks, but we've also seen the Aussie share market hitting above 4,500 points. So I guess the big question is, can it continue? To answer your questions and more, tonight I'm joined by Ken Blomfield from Financial Clarity and also Michael Kodari from KodariSecurities. So welcome to the program, gentlemen. Let's start by talking about the market and where it's headed. Ken, you're quite positive on the market at the moment.
Yeah, Julia, I'm pretty positive on the market. I think the Australian market, it's pretty obvious what's happening at the moment. That is, with interest rates going down, you can see that most of the interest rate sensitive stocks have done very well. And probably the best gauge of that is to look at the banks. You know, the banks at the moment with interest rates now at 3.25 officially, the banks have kept a little bit of the margin. They haven't passed it all on from the Reserve Bank cut. And they're looking pretty good. Most of the banks are yielding up around 8.5% when you count the franking credit. So I think investors are looking at that and saying the world's looking a little bit better all round. Europe's sorted out some issues. Come back to the long-term issues there maybe later, but they've sorted out some issues in the short term. The US has provided some liquidity, so yes, looking all right at the moment.
So Ken, you're liking the interest rate sensitive areas, and it sounds like the banking stocks are some of your favourites with the high yields. But what about the regional banks? We've seen Bank of Queensland with that massive profit downgrade and the shares having some real downward pressure. So are you sticking to the big four? What do you think?
Look, I am sticking to the big four at the moment. I think the big four have the pricing power, the distribution and the margins. The only regional that I'm having a look at the moment, I haven't dipped my toe in yet, is Bendigo. I think Bendigo has done very well on the bad and doubtful debt side. They've been able to really keep their margins a little bit more solid than some of the others. Okay,
and Michael, what are your thoughts on the market at the moment? Are you a bull? Are you a bear? Neutral?
Look, I think the market's done considerably well. You know, we closed up at 45.26, the highest since 16 months ago. And at this stage, there's a lot of news coming out from Europe still regarding Spain. If it does need a bailout, Greece's Prime Minister coming up and saying we actually need more funds, otherwise we can't go ahead next month. So I still think there's a lot of opportunities in the markets. I see the RBA cutting down interest rates is very positive for the market within the current times.
Okay, so looking at specific stocks and sectors, what area are you concentrating on?
The main sector, look, I'm very bullish on gold. I think gold is going to do quite well. The fact that there's more money being printed around the world, and at this stage gold is sitting around 1770. There's a lot of gold producers that we're looking into that are producing gold at a very cheap rate, and they got strong balance sheets and good management teams behind them.
Okay, so an interesting time for the market, and we have seen a fantastic performance with the Aussie share market, the ASX 200 hitting above 4,500 points. A lot of analysts, economists predicting that we're going to see another rate cut, which should be a positive for the market. But let's go to our first caller of the night. We've got Terry on the line from New South Wales. Terry, welcome to the program. What's your question tonight?
Hi, Julia. Hi, panel. Thanks so much for taking my call. I was just interested in the panel's view. I wanted, if the panel could each give me a couple of good growth stocks in the top 100, 150 ASX, if that's possible, please.
Okay, so it's a good question coming through from Terry, and it's a great question because usually when we do start to see the market run up, what we do start to see is a bit of a shift from the defensive high-yielding areas into the growth areas, and we're starting to see that at the moment. So looking at the blue chips on the market and the top 100, some of our panellists picks for growth in this area. I mean, Ken, we were talking about the banks, but this isn't actually a high growth area. They've got strong return on equity, but earnings growth rates aren't too attractive. What are some stocks that you are interested in terms of growth?
One of my favourites is SEEK. SEEK, of course, is the largest online employment business in Australia. I think they've got a fantastic profile. They've been going for quite a while now, so they've got a reasonably mature business in Australia. They've also got exposure into the internet markets of China and Brazil, and also in India. So very interesting growth profile. I think very well run business. very capital light. They don't need a lot of capital to keep on reinvesting back in the business, so very strong cash flow. So SEEK's one of my favourites.
Okay, so liking SEEK, and Michael, looking at the top 100, what do you think?
Look, I still think I think the banks are doing very strongly. So I think they're still in value. With our banks, we got 4 of the top banks in the world. So out of 15 banks that have a AAA rating, we have 4 of them here in Australia, and combined, they got a market value of about 400 billion, which exceeds that of the Eurozone itself. So I do like the banks. Companies like Westpac, I think they got a great management team behind them, and they've performed extremely well.
Okay, so liking the banks for growth. I mean, some of the stocks that have been on my radar, Terry, are in actually the telecom sector. Now, traditionally it's a defensive area, but it's some of those smaller telcos which have really been grabbing my attention. So stocks like IINet, IIN is the code there, even TPG, TPM is the code, and AMM, which is Amcom. These little telcos have been hitting 52 weeks highs, and so some strong momentum behind stocks like this. Also, if we have a look at stocks like CCV, which is, of course, cash converters. It's another growth stock that's been doing quite well in this type of environment. So I think there are some exciting movers on the Australian share market. A lot of companies reaching those 52-week highs, and I think that strong momentum that we've seen over the last few months will continue for these stocks. It's an interesting question from Terry, but let's go down to our next caller. I've got Frank from Queensland on the line. Frank, welcome. What's your question tonight?
Hi, thank you for taking my call. Just on 2 stocks, on EAX, which is Energy Action Australia, and Webjet.
Okay, so we're having a look at EAX, Energy Action Australia. Now, the stock was down by 5.1%. So we did see a little bit of a drop-off after the very strong run that we've seen from this stock in the last 52 weeks. And we're also having a look at Webjet. Just starting off with Energy Action Australia, and this is a stock that's up by 26% over the last 52 weeks. It is a smaller company on the market, a market capitalisation of about $56 million, a yield of about 3.2%, and a PE ratio of around about 15. What do you think, Ken?
Yeah, Julia, I think Energy Action's a great little stock. It's a stock that I own for my clients. We were involved in the float. The reason we got involved with Energy Action was we thought that, well, first of all, what do? Energy Action's a company that basically does online auctions for energy. So they bundle up energy and people actually bid for it, interestingly enough. So companies get online and actually bid for parcels of energy or pockets of energy. So it pushes down the margins for the energy providers, but it's a fantastic service. And it's very relevant at this time because, you know, energy costs, electricity costs have gone through the roof. We all know that as consumers, but it's the same for companies as well. Now, this is this is a capital light company. So this is a company that has fantastic cash flow and doesn't have a lot of overheads and a lot of money needed. They're in the very early stages of growth. They've had fantastic growth to here. I see no reason why you wouldn't hold on to. You might take some profits out of a company like this. Any company that's gone up, I actually took some profits for clients out about 2 months ago. Any company that's done as well as this, not a bad idea to take some profits out, but it should do very well long term.
Okay, an interesting business on the Australian market, a fairly new one, Energy Action Australia. It's up 25% in the last quarter. It hasn't been trading too long on the ASX. But what about Webjet now? Now, this is a stock that's up a massive 111% over the last 52 weeks. Michael, having a look at Webjet, and it's one of those companies which is doing well out of the structural change that we're seeing in the industry. It's really taken the bull by the horns in that internet space and the travel space, and the high Australian dollar just helping with international travel. Is this one you like, or is it too high, too lofty?
Look, most definitely. You know, it's done extremely well in the past year. Now, in that sort of sector, in the travel, online travel, as the Aussie dollar goes further up, you know, a lot of us go out and travel more. The company itself, in terms of performance, the balance sheet's very strong. It's had a return on equity of around 40%. You know, in terms of debt-wise, it doesn't have much debt. It's a very good business. So the management team is great too. So it's one of my watch list, and I actually hold some of their competitors. So I like the business, and I think it's definitely one that investors should look into.
So liking Webjet. How about you, Michael? Ken, what?
Yeah, Julia. Look, I love Webjet. It literally has taken off. Excuse the pun, but it's a stock that I'm not in. I'd love to get in at the right price. It's one of those stocks that it's actually a good lesson for investors because it looks expensive, but it continues to perform because it has a fantastic return on equity and employs its capital very well. And yeah. Great little business.
Okay, great business, but talking about growth, it's certainly on growth valuations, a PE ratio of 24, but as Michael mentioned, a very strong return on equity for Webjet as well.